Good morning, ladies and gentlemen. Welcome to this webinar today. It's the second trading day of the year. Happy New Year. Good morning to those who join us now. I wish this year will be one of the best years in your life to achieve, first to have good health, to love and to be loved as well, and to achieve whatever you want in your trading and in general in your life. Okay. So let's have a look first the risk-free warning here, the disclaimer, just to make sure everyone understands that these webinars are for information and general information only, and they don't intend to give any personal advice to anyone. Guys, please make sure you start engaging if you haven't so with the weekly trading podcast to understand how can you use the news information, the upcoming news events, the upcoming news release events in the market in order to know how can that market be affected either in the near term or in very rare in the long term, because there is no such a news event, a single news event in the market that can affect a currency for 2-3 months in a row and keep going just from a single news event. Okay. And of course, please make sure you download the mobile application of Admirals if you haven't done it yet. Let's find this one here. So for some people, very few people, you can just see the number here. They just prefer to play directly the podcast from the website, but the majority, they simply download it. You can download and listen from Apple, Google Podcast, Spotify, SoundCloud, and Speaker. I'll share the link anyway. Here is the link. And of course, I would like to share the link of the Admirals Global Instagram channel. In case you are not following us on Instagram, please, guys, make sure you do that, because on every single day we put reels, we put stories, we put content here that everything is relevant to your trading. I do a lot of interaction with Instagram myself, so if you are participating in these live webinars, because you already know my trading style and how do I explain most of the things, then it's going to be also much simpler and easier for you to understand when I do the reels, the market recaps, and all this stuff. Okay. So enough said about this stuff, and let's read today's top headlines. Before we proceed, just to let everyone know that still today, for most bankers and big hedge funds, it's their first day technically in back to work. So the markets, they're going to start picking up in a bit of liquidity and volatility today. From tomorrow onwards, I expect the markets to stop performing. So let's be cautious on our intraday trading to understand that spreads out of New York session and London session can be a bit widened, at least for today. So today's top headline: China December Caixin Manufacturer Purchase Manufacturer Index slips further into contraction. Investors brace for more market turmoil as interest rates keep rising. Tourists and manufacturing fight for the future of power in Europe. Ukraine strikes Russian forces in Donbas in deadliest attack in months. And the last one, Elon Musk's Tesla comes up short of 2022 delivery target as growth slows. Well, that's all. Now, here is our MT5 platform. And we start as usual with the dollar index. This is the daily chart, and we see this consolidation to the downside. Now, some people, they just argue about this strong support here. Maybe we're going to have a bounce here, and that can happen definitely. On support, we don't know if buyers, they're going to show dominance and they're going to push prices higher. But what we know for sure is that this market, it's moving into a decline mode. So most likely we do expect the price to break and continue. All right, we will see what is going to happen. Anyhow, right now, we are not selling directly on support, but like if we go to the Japanese yen pairs, you will see that all of them are in a downtrend. Euro yen, pound yen, Aussie yen, Kiwi yen, Swiss franc yen, CAD yen, and USD yen. All of them, they have this downtrend. So yen, it's very strong. Of course, because we see this type of weakness in the dollar, we do expect also that USD JPY, it's going to move to the downside. Let's have a look at some. Good morning. Good morning. You are live here. Awesome. Awesome, Benedict. Welcome. David, Happy New Year. Mladen, good morning and Happy New Year. Florin, hello and happy and profitable year. Can you analyze NASDAQ on 1 hour? Thanks. Absolutely. Happy New Year, Theo. Happy New Year, Kyla. DAX 40 around the support. Anyway, we have better idea if we just move up a time frame, and on the weekly chart, we do see this consolidation here on the NASDAQ. On the daily chart, an extensive range. So we have to wait and see what the market is going to do. Let's move on. FTSE, it's just playing. Do you see how much rejection during the Asian session? I mean, this is, let's just extend this one a little bit. Dow Jones still remaining below this 38.2 pip area. So we do expect to see some more weakness. If it's going to come, who knows? Also, it's very, very dependable on the US dollar. NASDAQ, we had this bounce of a strong support on the daily chart, and the averages, it looks like they don't confirm each other here, because we see this downtrend on the Dow Jones. On the NASDAQ, we see this maybe strong support can hold to push to the upside. However, if we go, let's say, to the 1 hour chart on the NASDAQ, zoom out a little bit, what can we see here? We can see that there is a strong support, strong resistance here on the NASDAQ. From a price action perspective, there is no such a strong tendency to analyze the price action, but what can we do? We can structure the market here, and if we take these waves like this, we see that it has bearish implication. But if we just zoom in and we see this move here, we see that a higher high had been created. A failure swing, this one didn't create a new low than this, lower low than this one, so we can call it as a failure swing. A higher high from this point, so maybe this is a good buying opportunity because it's already retested the 61.8% fib retracement on the 1 hour chart. So if we take the draw from here to there. Here it's the 61.8. So if you sold it earlier, you could have a pending order here, and your stop may be somewhere below here, and you could wait for the market to go and retest this top part there. Okay, but for now, right here, on the very short term, it looks like a bullish implication, especially if the dollar is going to help to create a push to the downside. So the Nasdaq can have more weight and see some push to the upside. About the currencies, let's wait for the MT5 to reset a little bit. Happy New Year. Hello, welcome, welcome. Hello from Ghana. Wow, awesome. Guys, gold this morning, it just exploded. The market was consolidating in this upward move. So we said that if we're going to break and hold above, we're going to be bullish on the gold. During the Asian session and now in the London Open, we see that the gold is just trying to climb higher and higher. And on the 15-minute chart, we can see these waves, higher highs and higher lows. So for intraday trading, definitely we are buying the gold. We can target this area here that we already marked. That's the next area of resistance. Pound against the dollar, again below this area of below this 200 moving average, this sideways move. We do expect, based on the big picture, we could see the market falling more, but the US dollar looks so weak. If the US dollar is going to break below, and that's how you have to think, guys, in trading. Okay, you can't think just isolated based on one currency pair, the combination, especially when you interact with the US dollar. First, you analyze the dollar index. So if the dollar index, it shows you this weakness like we saw earlier, and we find a currency pair that has bearish implication against the dollar, like the pound dollar, if you believe that this can move lower, but also you can see the dollar index move lower. What does it mean? It means the dollar is weak. Now, currencies, they go in pairs. Pound, the first pair, US dollar, the second pair. If we say we are short pound dollar or we are selling pound dollar, it means we identify weakness in the pound. Sorry, we are selling the pound, so most likely because the pound is weak, and we are buying the dollar because dollar is strong. But if we have this picture like we saw earlier on the dollar index, and we saw that the dollar is weak, if the dollar is weak and the pound is weak, this pair, most likely, in many cases, it's going to just move sideways, like we see here. I hope that makes sense and you understand. So you can maybe find another currency pair that still US dollar weakness, but the first pair, it has more strength. Like now we know that the Aussie, the euro just retested a resistance, so we want to see it right now. Euro against the US dollar. What do we have here now? We said it's been a while we were bullish. Okay, from this point here, we took our profits there, and the market now is retesting this area of resistance. Now, if we're going to see push to the upside, or if we're going to see continuation to the downside, again, our strategy allowed us to identify this portion in the move. So we traded this type here because that's what we identified it. Now, at this point here, we are identifying a type of double top, but this trend line, it's still It's intact. We didn't break below any trend line, any support trend line, because the price didn't close below any trend line. So the big forces are still bullish in this market, but we see the price action trying to maybe consolidate for a while. So is it worth to start selling right from the top? In my trading plan, there are some rules, and the same rules I'm sharing with you guys here every single day. First, we need to see some kind of market structure break to identify a reversal. If we have a trend line, we want to see the price close decisively, closes below the trend line. If we do have some moving average, 20, 50 moving average, we want to see the price closes below at least one of the moving averages. And then we're going to check if the market gave us that lower low and lower high formation. And if yes, then we're going to start looking for our price action, or to use the Fib tool retracement to put some limit orders and get into the rebound of the price. Okay, that's simply how do we trade, and that's what, if you, I believe you understand so far, that's what we do on a daily basis. So this area here, so far we identified some intraday opportunities on the gold, so we can wait for some pullback and we can buy the gold. Now, these webinars are not holding for 1, 2, 3 hours in a row, so we can stay here and talk about the pairs and see, okay, now we found the opportunity, now we are executing. Okay, that's why I talked more about limit orders, because we can set up our limit orders in some areas and we wait to be executed. Okay, or if you are around and you are trading price action trading, then that's, again, that's cool. Aussie USD, again, the US dollar, it's not that clear now. It's on support, so the rest are most likely on resistance, like this one here, the euro against the dollar. The Kiwi, although against the dollar, showed the first sign of weakness, because we had this trend line that was intact for so much time, full 2 months, and it broken below. And then the market make this move backwards. So that was the swing, and it broken. And then we can identify some area, some spot to sell it. But what if we're going to sell this one because of QE weakness, but the US dollar, it's still in a downtrend at support? And what if the dollar breaks below the support? If the dollar breaks below the support, it means the dollar, they get so much weakness, and the QE, it's also weak. So what's the bet? What's the highest probability that this market will still trading in a lower levels? And that's what you guys have to understand when you see the markets. How can this combination can help me to get into high probability trades? All right, guys, just give me 10 seconds and I'm back. Yep. So let's move on. Let's have a look at the yen pairs. So won't it consolidate? Sorry, Kylie, I just saw it now. In which pair are you talking about? The Kiwi? If you're talking about the Kiwi, yes, if we're going to see some weakness on the dollar, most likely we're going to see some consolidation here. unless the New Zealand it's very, very weak and it's going to just melt down. Okay. But if the dollar is going to push higher from that support zone, then definitely we can see some more weakness here. Yeah, that's correct. Consolidation, it's more likely to be the outcome. So gold, Rumen, hello, Rumen. So gold is more clear till NFP. Look, it's more clear, not till NFP. It's more clear until the price will reach us at the resistance level. All right, because price moves from one level to another level, from one area to another area. And if a news event will be at the time or it's coming into play, then it's going to just help the move to move faster to that area of either resistance, if it's in an uptrend, or support, if it's in a downtrend. So saying that, for the gold, we do expect the move to come here. Now, if it doesn't come before the NFP on Friday, then we can see the NFP driving the move. But if it's going to come here today, it came here today. Okay, that's what we will have as an information. Let's move on. USD JPY. USD came at the support finally, and it broke below, but now the price is fighting if it's going to stay below the support. If we go to the lower time frames, we can see that we have more information about too many closes on the 1 hour below the support. The price now it's creating this retest. For 1 hour traders, then if they validate this as a confirmed support broke, then it looks like shorts can be initiated on the lower time frames. But if you are a 4 hour trader or one day trader, you definitely need to wait for that time frame to close in a couple of days below the support. Australian dollar against the Japanese yen. That was a trade really I missed, and I don't know why I missed that trade. I didn't have a limit order here to get into the short side. And usually I have in other JP pairs, I had limit orders and I didn't go triggered because the price just melted down before it reaches any swing or any 50 or 61.8% Fibonacci retracement. This one's still down. We have lower highs and lower lows. In the lower time frame, the price, it's going to just doing this consolidation before it continue. We said many times, there is no price that continue in a straight line, either to the downside or to the upside. It moves in waves, and we want to use, if we are selling, we want to use the buyers as the force to get us into the short side. Okay. I don't think so. Most of us, we were trading at this time around 6 a.m. So it's what? It's 4 a.m. GMT time, UK time. So we went around to take, let's say, this limit order here. That was mostly for Australians and traders in the Asia. So back to the daily chart, we are still bearish here. Euro against the Japanese yen, much more weaker the euro. So again, from here, I didn't have a pending order on the 50. I did have a pending order on the 61.8 fib retracement, to be honest. I didn't go triggered in, and that's okay. What to do? Another one possible for today is where is the other pound? So the CHF also against the Japanese yen, it looks like a good sales opportunity for today. If we go on the lower time frame, we had this move to the downside. So maybe we can either see a break. Look, there are two ways to play this, guys, in general, in trading. Either we are selling with limit orders when the price is retracing, or we are selling with stop orders when the price is trying to break below. So here, if we put a stop order, sell stop order, it means if the price touches here, we expect it to continue below, and we don't expect it to consolidate or to bounce back. So traders, they used to put stop orders here, stop sell order, and they have their stop loss somewhere above, and they expect the market to continue moving downwards, and the same opposite when we are in an uptrend. Okay. So if you're, but I don't want anyone really to start placing these sell stop orders right here and then shut down your computer and just go to work or go to something, because really this is intraday trading and it requires more discipline. We have to be in front of the screen when we do intraday trading, because sometimes we need to move our stop loss to break even in order to save something. It's totally different mindset to be profitable as an intraday trader. Okay. Unfortunately, many traders, they get into the thing that because it's a shorter time frame, it means it's for traders, they don't have patience. I don't want to be in a trade for 2 days, but what? You just wait for the price to move from the one place to another place. Same also with intraday trading. You wait for price to move from one area to another area. But it doesn't mean because you don't have patience, you're going to trade the 15 minutes on the 5-minute charts. All right. I hope that's clear for many of you. Of course, we have so many trading sessions. And here at Admirals, we are talking now with the team to add few more interesting sessions for you guys. Maybe we're going to start doing separate intraday session. We're going to do some investing sessions maybe once a week. We will lay down a plan, and definitely we will let you know, because my purpose here is to find the most approachable and suitable way, not one way, it's going to be multiple ways to cover the needs of type of traders here. And gas, we are still selling. We talked about that. And weeks ago, we put our $3.50 mark, the support. And we said that if the price, it's going to break below, and it broke, we're going to keep selling the gas all the way down until that one here. Of course, on the 4-hour charts and 1-hour chart, that was a much more convenient trade. Especially if we go to the line charts, we can see that the waves are consistent here. And traders who are trading, what's the problem with the stop orders and trading stop orders instead of limit orders? Again, stop orders, we are placing them if we are in a downtrend, the price is moving to the downside. If we want to get filled at a trade at a price lower than the current price is here. And if we want to, current price, it's there, that's the current price. If we want to get filled at a price lower than the current price, then we place the stop order. So we can enter here, we can have our stop loss somewhere either here or there. Okay. And then we wait for 2 to 1 in the continuation. But what's the problem with that? At many occasions, we see the price, it's just making some weird continuation consolidation patterns before it continues to the move. And that's why the limit orders, we say that they are more conservative, they are more safe to go on a limit order, because with a limit order, we go, yes, against the trend, but we are in a retracement. So if we place a limit order here until the price, it's going to come to retest the last swing or the last support, then we can make 2-to-1 or 3-to-1 until the price comes here. So it's more conservative to trade the limit orders. So by saying that, anyway, that's another great pair to keep an eye on, and today and tomorrow maybe, because it's just on a free fall, and where it's the next buyers, they most likely going to kick in at a previous level of support, and that's clearly this one here. If we zoom out and we look on the left, we will find it. Okay, guys, I think that's all from me today. I hope you enjoyed this session. So the main focus for today for intraday trading is definitely the Japanese pair, and from the commodities, it's the end gas and the gold. End gas to the downside, gold to the upside based on this pattern. So we will see how the markets, they will perform. So saying that, I would like to wish everybody to have a happy trading day ahead. And I look forward to see you again tomorrow at the same time. Thank you so much. Bye-bye.